What is up, everybody? Solomon here. I hope you guys are all having a great Wednesday. Gigantic news coming out in the crypto space today. PayPal integrating with digital assets. However, that does come with a caveat as well. We will go over that momentarily. But I wanted to touch base on this, and I found these documents today, and I do not believe anybody's touched base on this yet. So buckle up, because this has to do with derivatives. This has to do with R3 and the International Swaps and Derivatives Association. If you see any scam ads on this video, please do not participate in those. This just came out today. More regulatory framework consultations regarding the International Swaps and Derivatives Association. I'll do a brief overview of who this organization is. The International Swaps and Derivatives Association is a trade organization of participants in the market for over-the-counter derivatives, headquartered in New York City. Multiple institutions, 925 members in 75 countries. Its membership consists of derivatives dealers, service providers, and end users. Now, if you are not aware, over-the-counter derivatives globally, notional amounts of over-the-counter derivatives rose to $640 trillion at the end of June of 2019, up from $544 trillion at the end of 2018. We hear a lot about this in this space. We know DTCC is very heavy in the derivatives space. I am just trying to present the fact that at some point, these flows for derivatives trading are either going to have to, they're going to be integrated as far as tokenization is concerned. There's going to be flows through digital assets at some point, and just imagine what that will do if you have all that volume pumping through a digital asset or multiple digital assets. $640 trillion in 2019. Now, over-the-counter derivatives, if you are not aware, are contracts that are traded directly between two parties without going through an exchange or other intermediary. Products such as swaps, forward rate agreements, exotic options, and other exotic derivatives are almost always traded over the counter. The over-the-counter derivative market is the largest market for derivatives and is largely unregulated with respect due to disclosure of information between the parties. Since the OTC market is made up of banks and other highly sophisticated parties such as hedge funds, reporting of OTC amounts is difficult because trades can occur in private without activity being visible on any exchange. Now, if you go into their website here, this is ISDA. I really want to flow through this, and then I'm going to get into these documents that I found today. They are extremely, extremely interesting. ISDA members. Now, I recommend that you go onto their website and take a look through here. We can see people like Accenture, who I talk about on this channel. But interestingly enough, this is a shout out to Kevin Cage here. Guess who's an associate of the ISDA? Algorand. And I'm sure you'll find other blockchain initiatives that are associates of this group. Now, let's get into the meat of this, though. The International Swaps and Derivatives Association, Incorporated, and R3, this is October 21st, 2020, have collaborated with Clifford Chance, Jones Day, Linklaters, and McCann Fitzgerald to publish 4 new white papers that analyze the legal issues associated with using smart derivatives contracts on distributed ledger technology. Talks about the potential for significantly increasing efficiency and reducing costs for derivatives market participants. You go down into the comment. This is directly from their press release. This isn't a crypto press release or any of that nonsense. This is right on ISDA's website. The use and implementations of new technologies. This is a quote from a partner at Jones Day. The use and implementation of new technologies is not a question of if, but when. We say it all the time. However, it raises some new issues for uncertificated securities, particularly with permissionless DLT systems where there is no identified person responsible for their monitoring. Okay. We strongly believe, this is from Linklaters in Tokyo, that DLT technology will enhance the efficiency of executing and operating derivatives transactions, but the legal issues associated with it require further consideration as market participants look to adopt this new technology in Japan. R3, or this is from McCann Fitzgerald. These new technologies offer tremendous benefits from the perspective of operational efficiencies and cost savings. But derivatives market participants also need full transparency etc., etc. We get it, right? This is all going in one place, though, people. And these papers and all this nonsense, why do you think they're talking about this? Why do you think they're talking about regulatory frameworks? The current ones and the current ones that may need adjusted to facilitate the utility that distributed ledger technology and the digital assets bring. Now, this is ISDA's website. This is the actual release with these 4 new documents. And then there is a 5th document that is a jurisdictional comparison. Okay? And I want to go through some of these right here. This is the jurisdictional comparison right here. This is the comparative table. I post all these links to Patreon, by the way, or you can do your own digging and find this stuff on your own. Talking about derivatives transactions, documented on a distributed ledger technology platform. Talking about tokenized securities. In the scenario where the parties are exchanging tokenized securities, tokenized, as a collateral pursuant to a derivatives contract where the relevant tokenized securities are designed simply to record real-world assets that are provided and exchanged on a distributed ledger technology system. It's talking about how might these parties dispute entitlement, etc., etc. Now, what's interesting, they go into 4 different national legal frameworks that exist currently and how they would interact with distributed ledger, digital assets, and the derivatives markets. And they talk about New York, they talk about Ireland, they talk about Japan, and they talk about France. I will go through and read the New York law one because I find it very interesting, some of the things that are stated in this. Now, first and foremost, hold on one second here. You know what? I'm going to go to this. I think I'm going to go to the second one. Oh, it was in here. Okay, yes, here we go. Apologize for that. In considering the use of DLT in this context, now, I want you to pay attention to this. This is talking about Figure 2. Figure 2 illustrates how, under a heavy chain implementation, the platform could house tokenized collateral assets that are native assets to a distributed ledger technology platform and could support the transfer of such assets between the parties. This is this Figure 2 right here, talking about U.S. Treasuries, United States dollars, different shares. Smart contracts automate the collateral transfer on a distributed ledger technology platform. Smart contract automates valuation of collateral that's already held by one of the parties. Automates calculation of party A's exposure to party B. This is extremely high-level stuff, people, but it's pretty clear-cut and dry as to where this all goes. Now, I want to get into reading a couple of these paragraphs. This one's a little bit easier. A more complex implementation of the collateralized DLT transaction could involve the replacement of the real-world collateral assets with a form of token or a digital asset that possesses intrinsic value, such as a tokenized form of the existing collateral currently used in derivatives transactions, aka tokenized cash or securities. In this case, the derivatives transaction would be associated with a smart legal contract, and the smart legal contract would handle the exchange of collateral in the form of digital assets between the parties, all of which would take place on ledger. Go down a little further here. For example, if the adoption of tokenized securities, hold on here, were the parties to collateralized DLT transactions conducted on ledger, where the parties to collateralized DLT transactions conducted on ledger do not use a securities intermediary and instead hold and exchange the collateral directly, different rules could apply. So that's not going to apply to us with digital assets, right? But down here in note 5, these challenges could be overcome. These challenges could be overcome by allowing for all parties to agree that all on-ledger transactions or collateral arrangements taking place on a distributed ledger technology platform are subject to a uniform choice of law. Such common law of the platform could then also be used to determine the, the legal holding standpoint of any tokens that are native to that DLT system. Native tokens to a DLT system. What does that sound like? That sounds to me like they're talking about tokenizing and using something like perhaps XRP, if that was the choice, because XRP is a native token on the XRP ledger, or something like Ether for smart contracts on the Ethereum platform. Pretty straightforward where this goes, and we saw how big the derivatives market is. OTC is the largest slice of the pie. and $650 trillion in 2019. Just wait until they start flowing this through digital assets and they start tokenizing these derivatives. It is going to be a complete monsoon. It's going to be a volcano of liquidity into this market, in my opinion. That is just speculation. That is not hype. They're telling you right now what's happening. I'm not saying for certain what digital assets this is going to apply to, obviously, but we know that R3 is involved in this. All right, I want to move along. Now, we can see the other links here. This is the Japanese law. This is Irish law. And this is the French law here. But this, to me, was the biggest news today, just because we can see where this is all going. I want to get into PayPal, though. But first, I wanted to talk about R3. Again, this is October 21st as well. What a coincidence. R3 joins EnergyWeb. Ripple just joined EnergyWeb at the end of September, correct? To decarbonize their blockchain, or the XRP ledger, and make XRP essentially the first carbon-free digital asset, right? R3 joins EnergyWeb on October 21st to provide enterprise-grade settlement services for the energy sector. If we go down a little bit further into here, with tens of millions of decentralized energy assets integrating to the grid and participating in markets through the EnergyWeb decentralized operating system, we need a way to conduct settlement flawlessly and at scale, explains the CEO of EnergyWeb. Since our electricity grids and the rules that govern them are highly regulated, requirements for settlements are quite different than in other industries. That is why our ecosystem members and users of EW or EnergyWeb DOS will greatly benefit from the deep knowledge, experience, and solutions that R3 brings to the financial sector. All right, now we see the EnergyWeb Ripple announcement here as well. Now, this was today. This is huge, in my opinion, from an adoption standpoint, or at least from bringing the masses slowly on board. But this is very much so baby steps, and there are some things that worry me about this as well. This is PayPal to allow cryptocurrency buying, selling, and shopping on its network. And I will clear the air right now for you all. That cryptoflashnews.com thing that says XRP is going to be one of these first assets is wrong. That news site is consistently wrong. This is the Reuters announcement right here. And this is, Bitcoin, I believe, Litecoin, I believe Ethereum, and I think Bitcoin Cash. I have to do my checking on that. I don't hold really any of those. Okay, Ethereum, Bitcoin Cash, Litecoin, and Bitcoin. Yes, that's correct. Now, the big thing is cryptocurrency payments that are on PayPal will be settled using fiat currency, such as the US dollar, meaning merchants will not receive payments in virtual coins. Maybe that's from a regulatory standpoint. PayPal is just trying to dip their toes in the water at this point. I feel, in my opinion, that definitely has to do with regulation, regulatory uncertainty, and a slow rollout. Now, also, I read in another article here that you can buy and you can sell on PayPal, but you cannot transfer your digital assets to any other PayPal user. They cannot transfer their digital assets to you. It's a very weird rollout, in my opinion. It's like, why get into digital assets if you're not going to utilize the utility of them? You're still settling in fiat. That does not make sense to me either. And the non-ability to transfer your digital assets to other users of PayPal, I don't know. I'm not a huge fan of the way this is rolled out. I can understand why they're doing it from a regulatory perspective, if that's why they're rolling it out this way. But I believe Brad Garlinghouse said it best today: 2 steps forward and 1 step back. That's pretty much my summation of reading this news today. Still huge. PayPal, 300 million members on PayPal. So from an adoption standpoint, it's nice to see somebody like PayPal, this big institution, integrating with digital assets. But I'd like to see full integration, not just dipping my toes into the water here. Now, the Bahamas today as well, they launched their central bank digital currency. This is Project Sand. So we've always talked about it. Once one nation launches a central bank digital currency, it is going to be a domino effect. I would not be surprised if we saw another one even before the end of this year or even early next year. So let's pay attention to that. We know that I think the deadline for the EU to make a decision is like June or July of 2021. And I can pretty much bet. I'm not a betting man, but if I was a betting man, I would bet that decision sways towards the thumbs up for a digital currency for the EU. Bank for International Settlements, talking digital currencies and global currencies again today. I'm not going to get overly into this. This is a member of the executive board at Deutsche Bundesbank. So this is at the China-Europe Finance Summit. This was big in my opinion as well. Boston Consulting Group says Ripple Tech often outperforms banks. And it's not just Boston Consulting Group. This is a collaborative paper that was put out by Boston Consulting Group and Swift. Directly talks about it's time for banks to revamp their cross-border business. Card networks, fintechs, and infrastructure providers such as Ripple and Earthport have entered the cross-border payment space in recent years. These challengers often outperform banks in speed, pricing, API integration, and the overall customer experience. To stay competitive, banks will need to change their approach. It's talking about innovation being one requirement. Swift GPI is an example of that, but structural changes also being needed. Banks should align their correspondent banking network along core trade and payments corridors to ensure that they can provide customers with support in the regions where they trade. Offering competitive pricing is another must. To support these changes, banks need to lower their cost base, increase operational efficiency, especially in core transition processes, and modernizing IT infrastructure is vital. Okay, that's fantastic that Swift and Boston Consulting Group are saying this, but do you think that we've seen this revolution that's consistently being taken place over the past few years now? Do you think the banks have it in them to modernize their IT infrastructure when they couldn't do it 40 years, 30 years, 20 years, 10 years ago? Do you think that they have time to do it now, being that that digital switch has already flipped? Or do you think that it's too late and they need to integrate or die? My opinion, very much so, is that the gambit's pretty much up. The gambit's been run, I should say, and that, you know, they're going to be, these banks are going to be updating their IT infrastructure with, you know, digitization initiatives, you know, in these blockchain and DLT companies, which we've already begun seeing. And that happens through integration through companies like Accenture, companies like CGI, etc. So banks may also wish to explore fintech partnerships. Yeah, obviously. Chainstack is set to ensure easy access to XDC. This is this Cordite announcement, the first digital currency built on the public Corda blockchain network. Now, we know that Corda Settler can utilize XRP or Swift GPI, but this is the public Corda blockchain network. I believe this is going to be like open source from my understanding. If you want to learn more about Cordite and this XTC, I believe that's the name of the token as well. I very much so recommend it. Watching Crypto Eddie's video from, I think it was 2 days ago, and she gets a little bit more deep dive into that. I'm trying to do a little bit of a quick news firing off here for you all. This is Unify Money partnering with Noom for real-time global transfers. Now we know that Noom is RippleNet. This is Silicon Valley neobank startup. Unify Money is partnering with Singapore fintech startup Noom for real-time money transfers across the globe. If you, well, it says right here, this tie-up will offer Unify Money customers an enhanced and expanded money transfer experience that happens in real time. In real time. Unify Money. This is their website right here, based in San Francisco. If you want to check them out, it's unifymoney.com. Pretty simple. Banorte partners with Volante Technologies for payments modernization. This is Volpay. Volpay is Ripple integrated, and Volpay can utilize XRP via the announcement. And thank you, Matthew LINY on Twitter again. Volpay can utilize XRP. This is a leading Mexican bank to enrich its cross-border payments platform with Volante's Volpay to modernize and future-proof its entire corporate and retail cross-border payments processing capability. Lots of verbiage that I always use on this channel. Extremely interesting use case given what Volpay is integrated into. You can see the Volpay Ripple processor module. Now, this is just interesting. This has really just has to do with this entire digitization that's going on across the board in finance and definitely biometrics. MasterCard to work with tech firms on fingerprint payments. That looks extremely sanitary for those of you that have been following, and I'm sure all of you have been following because we've all been dealing with it this year. What's been going on this year? But yeah, fingerprint payments are there. I'm sure we'll see retina payments at some point within the next 5 years. I think that they already do those in Asia, so I found that interesting. If you want to learn more about derivatives, feel free. I mean, that information is pretty much across the board. Easy to find right on the internet. Just Google it. There's different types, obviously. Derivatives is one of the three main categories of financial instruments, the other two being equity and debt. Derivatives as a whole, I've read anywhere between like $700 or $800 trillion to like $1.2 quadrillion. We know that over the counter, from what we just saw in 2019 as a whole, $650 trillion. And that's trillion with a T, obviously. And we can see where this is all going. They're talking about digital assets. They're presenting the current regulatory frameworks, talking about potentially what needs to change as well. Also, Bank for International Settlements has a updates as of 2020 on their website with over-the-counter derivatives that are outstanding. And you can go and check that out as well. I hope you guys enjoyed this video. This was a gigantic day for news. I think the derivatives news is bigger than anything that I've seen. Especially now that they're talking about tokenization directly and utilizing distributed ledger technology, not even just DLT, but native assets on Ledger to that DLT platform. And we all know where this goes. So I hope you guys have a great morning, afternoon, evening, wherever you're at in the world. And I will see you tomorrow if there is news to present. Later.